Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since Monday, the Australian dollar has remained weak as traders brace themselves for today's RBA rate announcement. Every first Tuesday at the beginning of each month, the RBA, or the Reserve Bank of Australia, holds its monetary policy meeting and announcement, along with Governor Lowry's statement at 2:30. Considering the inflationary pressures, the central bank is expected to lift interest rates for the second time in as many months, with the broad range seen around 15 to 40 basis points. However, with the rate stands presently at 0.35%, it is expected that a 40 basis point is favoured, which would see the market viewing the RBA locking in a 0.75% rate hike or 40 basis points, giving a 0.75% hike. Looking at the technicals, the market is a little bit weak as we go into the RBA. However, towards 71.45 or a little bit lower, maybe even down to around 70.90, I feel the bulls will return and therefore look for a rebound that could see the market return back to challenge that 60-day moving average, which is around somewhere 70 to 60.65. Looking at the euro was also weaker as the dollar index, which measures the greenback strength against a basket of 6 major currencies, covered further ground since the US jobs report and is trading around 102.15. Meanwhile, as investors scrutinise the recent economic data in the US, we now look to this Friday's US consumer inflation data, or the CPI, which comes out this Friday, that is mentioned, and sees possibly a slight easing of 8.2%. The market was last previous of 8.3 in the year to year, that is from April, and down in March from 8.5%. Looking at the technicals, I feel the market should find support around 106.25.30 and see if we can get a rebound. Looking at dollar yen, the market is stretched higher, and I'm sitting neutral at the moment due to the recent rally that's put the technicals overbought, but still ADX is trending. I don't really have a view. However, looking at the monthlies, we can see that there is some resistance coming in around 135. So this is the reason why I'm not actually participating in any views at these highs until I get some confirmation of where this rally will run out of steam. Sterling still pretty much holding above the level, seeing at 126.1565. I feel the market should eventually take a snap from these levels, that is to the bullish case, and rebound through the level of 125.40 and then go on to 126.05.45. Sterling Kiwi staged a somewhat rebound since 191 figure with a posted with the inverted hammer, which has come through slightly positive. The market is now looking to the top side challenge around 193.80.90 and then reassess. Finishing up with gold and oil, the market is weaker as we look towards the support level of 1,838. I feel there is still room, given by the technicals, that we could get back to 1,824 and then maybe rebounding again back to 1,880. As I recently said, I would only entertain this market towards the top side of the range or close to the bottom side, and this is where I'll be viewing where I expect bulls to return. Finishing up with oil, the market's posted a hanging man around that 118.50.90 level and struggling at this stage to recapture its momentum. If this pattern continues, then we need to see a break of 115.40 to support the bear case back to 109 and reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.